welcome back to another podcast. We're excited to have an expert in a different industry that works a lot with our building company and is involved heavily in the real estate industry in general. It's good to talk to other professionals. It's good for me because I get to learn while I talk to them. We don't generally talk in this capacity, although we talk relatively frequently. This is a in-depth kind of analysis, and I get to learn more about, the products that you have and just more about how you got into the industry. So I'm excited. Typically insurance is not the most fun thing to talk about, but I think if the audience is involved in the real estate industry, that it's super important to have someone who you can turn to have the insurance side down. They're the one who's the expert, and especially if it's a person like Oliver, who I have a relationship with, I know he has my best interests at heart. So having him on my real estate team has been super helpful because he points me in the right direction. I don't need this, or I should do this. And I don't have to worry about all the ins and outs. And at the end of the day, my business is protected. So I suggest you guys, if you're in the business, find someone like Oliver, and he's going to dive into exactly what he does. And you can either reach out to him or find someone that, you build a relationship with, but we'll dive into it. And the first thing I want to say is kind of just, how did you get into this industry? How did you get into insurance? I know you did one thing, I believe, before this. Can you talk about that progression?
Yeah, for sure. So, well, first off, I appreciate the kind words.
Yeah.
Thank you. And thanks for having me here today. But for me, so getting into insurance before that, well, it was actually how I got into it was when I was a senior in college. There was a business expo at the college that I went to. And at the time, there was a local agency there who had come by, and I had met with the owner, and we just kind of hit it off, connected really well. And he had invited me to come visit the office the following day. And so I did. I went to his office and spoke with him about insurance. And to be honest, at the time, I didn't really know, I didn't know much. And that was 2022. So that was like 3 years ago. And since then, so I started working for him and just kind of started growing my knowledge in insurance because, to be honest, who in college knows anything about insurance? So
Sure.
Came out of college working there, and then spent about a year and a half in the Chattanooga area working at that agency. And then I moved here to Nashville about a year and a half ago and started working for East Insurance, which is where I'm at now. And then while I was at East, or since I've been at East, our niche is kind of working with a lot of real estate investors. And that's obviously how you and I kind of got connected. So,
Sure.
And it's been fun. I mean, obviously I do insurance, but it's been fun learning about the real estate side of things too. So that's just kind of my background there is how I got here.
Cool. Yeah, I think it's fun to be specialized and kind of, instead of doing a whole bunch of different things, I would imagine, because it's just like, this is what I do. And then also that will help you narrow down your clientele. It's not like, okay, well, what do I do on a given day? Who do I go to try and, garner relationships with? It's like, I only do real estate.
Right.
So you're basically a real estate person, even though you're on the insurance side. And so do you only do completely, you would never do, 500 people healthcare for a company? Like, if it's not real estate, you don't have any products necessarily?
Yeah. So our agency and myself, we don't do anything health insurance related, no health insurance, no Medicare, but I do personal and commercial insurance. So on the personal side, that's your home and your auto and your life insurance.
Mm-hmm.
And then the commercial side is your general liability, workers' comp, the property. And then in our case, if it's a builder's risk policy, or if you're doing ground up development, or if you have multifamily units, that's something that, obviously we do as well.
Okay. Cool. Is there as real estate investors, especially when I first started and almost to this day, there's still holes in my knowledge, by not even close to being an expert by any means. Is there any big holes that you see with investors? So you go to lunch with them and they don't know this, and that's a common theme, and that's relatively dangerous hole. Is there anything that kind of comes to mind when I ask that?
Do you mean in terms of coverages for the policy?
Yeah, coverages flood insurance specifically, or
Yeah.
pipes busting, they need to have a certain rider. Is there one that's how is this not well known that this is
Right.
is there something that comes to mind?
Yeah, there's definitely a few that come to mind. So the first one, I mean, in Tennessee, over the past few years, it feels like especially, we've been getting these flash freezes in the winter. And so, I mean, if you're doing a renovation in the winter and you have a pipe that busts underneath, if you have a crawl space, or if it busts somewhere in the house and then leads to water damage, that is included, or that is covered in most of your standard builder's risk policies. But some of the what we call like the endorsements, the add-ons, the ones that I typically, if you don't mind, just I'm talking about the ones that you and I talk
Sure.
about.
Yeah, absolutely.
So the ones that I always walk through with you that I want to make sure that are included, I would say the big three is probably your service line coverage, your sinkhole coverage, and then also too, you want to make sure you have vandalism coverage if you're doing a renovation, because if your home or the house that you got is vacant and under renovation, you want to make sure that you have that vandalism coverage, because I mean, if some, Yahoo teenager gets in there and was to vandalize the inside of it, if you don't have that endorsement or that add-on on there, you're not going to have coverage for the damage that they did to the property.
Okay.
The other one, the big one, is the service line coverage. Sometimes when you acquire a new house, sometimes you don't know how the pipe situation is. I know just from experience seeing people who have bought houses, or, you're buying a flip, and come to find out the plumbing isn't doing too well.
And we're talking about the line that goes from the house to the street that's underground, and it's like $10,000 to fix typically.
Yeah, easily $10,000, because they're going to have to excavate to even get to that utility line, and that's where your price is going to go through the roof. So, and these coverages, I mean, it's as simple as clicking a box. I check a box on my side and you're covered. And of course, some of them cost a little bit more money, but usually it's maybe $5 to $10.
Is that per rider? I keep calling it a rider. Maybe it's not the right term, but is that per, like, so each sinkhole's $5, the service line's $5, and then, okay.
Yeah.
So like a total of $15 and you're covered for all those.
Exactly. The difference is, it could easily be just maybe $10 to $20 additional per month.
Cool. I think the vandalism one is great. And I just learned about that on one of the last conversations, because all the homes these days are needing to be staged to sell. And that's, 15, 20, 10, whatever it may be, thousands of dollars in furniture in the homes. Now that every flipper, every new construction person has to do, and you're covered for $5, $10. I mean, that seems to make a lot of sense to me. Yeah.
Right. Exactly. And then, I think the last one, did I mention sinkhole?
You did.
Okay. Gotcha. Yeah,
but that's,
that one's really important.
Probably less common, but obviously then at the other side of it, it's more destructive, right? You lose your entire house. So it's kind of the extremes, right?
Right. Exactly.
So how do rebuilding costs affect insurance coverage? And is that something that homeowners often underestimate? Is that, I guess they're saying, I only want $100,000 of coverage, and they think they can get it done for that amount. Is that common? Or I feel like the lenders might step in and say, hey, I'm kind of in the business. That's not enough.
Yeah.
Is that common, or is like I said, do the lenders kind of squash that?
I think typically just in the deals that I've been a part of, I see most of the lenders have a minimum coverage, usually of the loan amount.
Sure.
So whatever your loan amount is usually what they're going to require for you to be.
Then they'll stick your neck out however much you want. If
exactly. Because they don't want you, I mean, they have an interest in the property as well. And so if anything ever happened to it, they don't want to go belly up on it either.
Sure. So maybe that's not
my understanding.
That big of that's not a common theme. Is that a fair thing to say?
I would say so, yeah.
Unless they do a cash deal and they're running their guns blazing, and maybe that's not so common.
Yeah, I would say what is important though in that aspect is potentially having, again, one of these kind of add-ons, the endorsements.
Sure.
So there's two important coverages, what we like to call extended replacement cost and then guaranteed replacement cost. Now, the guaranteed you're not going to be able to find on a renovation policy, but you can find extended replacement costs, and what that is on your insurance policy where it says this is your dwelling coverage. If you have that extended replacement cost add-on, then what that means is, depending on the carrier, that means you would get 25 to 50% additional coverage if there was a total loss at the property. And the biggest instance where you're going to want to have that is if a tornado was to come through town.
Okay.
And if it destroyed your home, it's most likely going to destroy, 20, 30, 40 other homes. And in that instance where your home is a total loss and all these other people's homes is a total loss, there's such a power grab for the building supplies to try and rebuild all these properties that have been damaged, that your home that would cost $200,000 before to replace it, all of a sudden might be 230, 250, 275, because when demand outweighs supply, it's the same principle as eggs. When everybody goes to the store and buys eggs in a frenzy, the dozen goes from being $3 a dozen to all of a sudden maybe 6 or 7. It's the same principle with the building supplies. If there's a catastrophe like a tornado that comes through town,
And that's an additional add-on as well.
it is, yeah.
So, and it only kicks in if there's a total loss.
Yep.
Okay. And that's another 20, 30%.
It's only, usually like 25 to 50%, and it only kicks in if you go past your dwelling amount.
Got it.
So
So if you don't need it, you don't need it, and that's fine.
Exactly. If you don't need it, you don't need it, but it's there to save you in the event that you have to go past that rebuild limit.
Got it. So what does the menu look like? How many things are on the menu? We've talked about 4 things. Like, we can't get into every single one of them, I imagine, but just to like lay out the table of how many there are. Just a rough number, I guess.
Total, well, included coverages, the ones that are going to come standard on there, it's usually around 5.
Okay.
You've got your dwelling, the personal property, other structures coverage, liability coverage, which is a big one, which you and I obviously talk about all the time.
Sure.
Because you want to make sure you have a high amount of liability coverage. A lot of ambulance chasers out there.
Sure.
We like to call them. So, and then, so I guess maybe 4 or 5 coverages.
That's your main course.
Yeah, that are kind of like the main course, and then your sides, or like that service line coverage,
Right.
sinkhole coverage, equipment breakdown, vandalism, and
How many sides are there? 10, 15? I guess you have like terrorism. You have like.
Yep.
It gets crazy, or is it less than 10?
I would say it's less than 10.
Okay.
Yeah, I mean you could really load it up, like a baked potato, but I would say the ones that we usually do, it's gonna be less than 10. Probably.
Okay.
Yeah.
Got it. And that's a good segue. When these builders come to you, like myself, it's just builder's risk, right? That's the main thing that their lender wants and that you advise. And in that package of builder's risk is that, so I guess the main course, the builder's risk policy, that includes liability, right?
It does, yeah.
And then it includes a tornado hitting it, knocking the framing to the ground.
Yep.
So that's considered what, loss?
The tornado?
The tornado would be...
Yeah, that's like what we call perils.
Okay.
So you have different perils for, your standard ones are going to be fire, lightning, wind, hail, civil commotion, smoke. And so if you have one of those perils that occurs,
Sure.
then that would determine how much your deductible is going to be.
Got it. And so basically what the main things we want in that package is the perils and the liability.
Yeah.
Is there anything else that the builder's risk is like, is there a third one that I'm missing, or is those the 2 main pillars of the builder's risk policy?
That would be, I mean, you have your builder's risk coverage, but as far as your main pillars, I think
that kind of covers it, right? Besides the small other little things, that's what you're really buying and hedging against. Okay. Yeah, that makes a lot of sense. Cool. The policies typically cover garages, decks, pools, like automatically. I guess that's why you're asking the questions. Like, is there a pool on the property?
Yes,
What if I said no to that question and there was a pool? Is it automatically not covered, or does that become...
Yeah, so in all of your homeowner's policies, and then even if you have a rental property or you're doing a renovation, they all have a built-in coverage called other structures, or sometimes referred to as private structures. And so what that means is any structure at the property that's detached from the dwelling is covered up to this amount. Usually it's a percentage of that dwelling, usually that dwelling percentage. So some rough numbers, if you needed your home covered for $100,000, it might be in the ballpark of 40 to 60% of that dwelling coverage. And so it's added on there at no additional cost at that minimum limit. Now, if you increase the coverage, it can bring that price up. So depending on what you have, it's usually like fences, carports, pools, a shed out back. And so that's going to be factored into that you have to account for those, and that goes into your other structures coverage.
Okay.
And then so if you, in the situation, let's say maybe you buy a house and initially it has a fence and a shed, but then you add a pool, and a pool could add $50,000 of, I don't know, I'm not really a pool expert, but it could be
Construction value, right? Replacement
the
value.
replacement value of that pool. How much did it cost to put it in there and build it?
Sure.
Well, you want to add that onto your other structures coverage.
And that, in 9 out of 10 people's cases, they probably wouldn't do that, right?
Exactly. Like
you're
not thinking, oh, I need to add this to my insurance
that's the last
policy.
thing. You're like, what are we going to do next weekend at the new pool, right? You're not thinking about the insurance.
Exactly.
That's why I think having a relationship like really tight with your insurance person is important, because they can tip you off to certain things like that. Because I think that's where people really get hurt just in real estate, is not being covered when they think they're covered. Like, I thought one time I was covered for a pipe bursting. We had I think we had the water heater in the attic, which is so super stupid. I'm never doing that. Learned it the hard way on that one for sure. Middle of December, it burst. We weren't covered for whatever reason, and I was completely unaware. I was paying my premium every single month. So it's like those types of things, I think, is where people get hurt. And again, just to kind of be buddy with insurance guys, something that's been fruitful for me.
Right. And, I just think I've appreciated our relationship, and it's very much like, hey, you just text or call me whenever. And
it's easy.
It's really easy. And,
yeah.
I being an independent agent, so basically being a broker, I'm not married to one company.
Sure.
And so I advocate for my clients rather than advocating for one single company.
Sure.
We have a handful of them. So if there was ever a sour relationship with one of them, I'll just hop to another one.
Yeah.
So
it's interesting, because I think some people, and I'm guilty of this, is like, oh, a broker, that means that there's someone in between making money. Like, oh, I could go straight to the source. But in reality, you're going to battle and putting these people against one another. And that's the value that you provide, is keeping those rates low, getting it done quickly, and really doing the shopping in a open ocean, for lack of a better metaphor, and finding the best rate, because it's always changing. I've noticed, for this type of property, this is the right person. For a flip, you're going to go with these guys, and keeping up with that and knowing that on an ongoing basis is not something that we as builders have time for. So yeah, that's been something. And I think that I've switched my mindset in the broker mentality, because I realized that there's a value that's brought there by you shopping it out for us, basically.
Right.
Yeah.
Well, I appreciate that. And I mean, honestly, I think what people don't realize either, with the rate I'm going to find you, it's going to be hard to find something even cheaper on your own. And to be honest, I don't even know. I know that you can get auto insurance directly, but with the stuff that we work on together, like a builder's risk policy, I don't even know. I'm not too sure of many markets where you could just go directly and get that for yourself.
So you think it's a lot different from auto?
I think it might be, I think it's a little different.
It's like personal, home, and auto versus commercial policies, right?
Right.
So you think it's a completely different world? I'm not mad.
I think so.
But yeah.
And to be, I haven't looked to see if there's any direct markets for a real estate investor to go get their own insurance. I'm not sure. I just
okay.
know,
Is it because of a licensing aspect of it? Like, you're licensed to do this. You don't have to be licensed to get personal stuff, obviously. So I guess that's what it is. You almost have to go through a broker in the commercial space. Is that?
Yeah.
Okay. Well, then there it is. Yeah. Cool. So to some fun stories, maybe. Do you have any claim stories? Do you deal with the claims? First off,
Yeah.
So if your clients are underneath you, you don't pass them off and they go under an umbrella where they call someone in a customer service center and they have to wait on, they're calling you. Is that right?
Exactly. Yeah.
Okay.
So, what happens, and, excuse me, sorry. I'm going to reset that.
Yeah. Go ahead. Okay.
So what happens is, I tell this to all my clients, but if there's a claim situation, regardless of what line of insurance it is, I want them to call me first. I want to be the point of contact to get the claim started, because I like to hear, I like to talk to them first about what happened. And of course, make sure if depending on what it is, make sure everybody's okay.
Sure.
But then what will happen from there is then I typically will advise them on next steps. So in certain cases, like on your homeowner's insurance. I do not like the way that it is right now, but with the current market that we're in, the insurance market, if you have more than 2 homeowners claims within a 5-year period, most preferred insurance companies are going to issue you a cancellation or a non-renewal, most likely, which means you have to go then to like a non-preferred market, and you're going to pay more. And it's basically like credit. You got to fix up your credit for a few years before you can get back with the preferred carrier. Sure. And so that's why if a client specifically has a homeowner's claim, or it's a rental property and they're talking to me about maybe filing something, then I want to make sure that it's worth filing. And the way that we do that is, get some quotes for the damages, get some quotes for those damages on whatever happened, and then we weigh it against your deductible. Some people have $1,000 deductible. Other people have a $2,500 deductible, $5,000, $10,000. And so hypothetically, let's say you have a $2,500 deductible and it's $3,000 in damages. I would say just pay that out of pocket, because
your premium will go up $200, and in a year you're going to lose that more than the $500.
Right.
Okay.
Whereas maybe in that same situation, it's going to be $10,000 worth of damages.
Sure.
I mean, that's a no-brainer. Go ahead and file that.
Right.
Get that taken care of. And so the insurance companies, I think one thing that I just want people to know is that they are looking at frequency of claims versus the size of claims. So if there was a total loss at your house and it was like a $400,000 claim, they're most likely not going to just drop you over one big claim, especially one that's maybe a catastrophe, like a tornado or lightning struck your house and it caught on fire, versus if you've got a handful of little ticky-tack claims in a 5-year period, even if, this is the craziest part, is even if they don't pay anything out, if you have an open claim on your policy, that still counts. So people could have $3 $0 claims on their home insurance and not be eligible for some of these preferred carriers. And I really don't like how I don't like that that's how it is right now.
Sure.
And I'm hoping someday it'll be a little bit more flexible again, but it's just, that's what I always try to educate people on, so that they don't ever have to go pay twice as much for homeowners insurance.
I like that your analogy that it's like credit. It's like once you're in this category, it's like now you're in the underbelly of the insurance world, right?
Right.
And you said it was double. Is that kind of what you'd hang your hat on? Like it's
it could be close to double. Yeah.
Okay.
It depends on what you were initially paying, but
right.
It can be double. And it's just, that just makes me so upset when I've seen that happen to people when it shouldn't happen.
It's a big difference to pay double, right? We're talking about, depends on the house obviously, but thousands of dollars, and you got to double that. It's double your mortgage payment if you're escrowed and things like that. Kind of a side question. I don't know. I mean, obviously we're in Tennessee. One, do you do anything outside of Tennessee? I guess I'm leading towards like Florida and flooding and all that. What's like I know nothing about it except for the news saying that they're no longer insuring anyone in Florida. And how does that affect real estate prices? What's your consensus on that? Is that all kind of BS, or is there some truth to that? Like it could affect prices and demand and things like that.
I think so. Well, I'm licensed in Tennessee, obviously, and then Kentucky and Georgia. So just some of the neighboring states. We're not licensed in Florida because Florida's a very strange state in the sense that not only do they have hurricane season, which causes a lot of damage every year or every other year whenever they have a big landfall like that, and then also on top of that, I can't remember what the stat was exactly, but somebody told me that Florida is the most litigious state by a good margin. I can't remember what the margin was, but supposedly Florida is the number one most litigious state in the U.S., which means if there's any sort of incident involving maybe an auto accident or injury at somebody's house, that means they're most likely a lawyer's going to get involved, and
Typically
big
on
money's
the
going to have to
client
get paid
side,
out.
right?
Yep.
So they're beating up the insurance companies, so it's less
Exactly.
attractive for them.
Exactly. That's
So-
exactly it.
Okay. So the idea that these companies are navigating or pulling back a little bit seems very
Yeah.
valid to you.
Yeah. On their side, I mean, it's a finance, it's all about,
Yeah.
it's all about the financial side of things. And so they're looking at it saying, hey, Florida gets a lot of damage from either hurricanes or extreme thunderstorms. And then on top of that, I mean, it's an extremely litigious state. So
Right.
some of them are saying, yeah, let's just go ahead and back out of Florida.
So the idea that their premiums are skyrocketing would
Yeah.
make sense to you.
Yes, to me it makes sense.
Okay.
I'm like, I can see why some of these people are paying $5,000 to $10,000 for homeowners insurance down there.
Okay.
I mean,
Whereas
it's
here
that
would be
bad.
2,000 or something.
Yeah,
So it's
so
like
that, yeah,
2-3x.
exactly.
what
It's
it is here.
2-3x because average in Tennessee is 2,500.
It's cheap here, right?
Nationwide, nationally, yes, it's
Yeah, got to be in the
one of
bottom
more affordable
quartile,
states.
right?
Mm-hmm.
Bottom 25%.
I would say so.
Yeah. Cool. I guess one thing you'd wish people understood more, I think maybe you answered that one with the credit thing, right?
Right.
Don't call us unless it's a big deal for your sake, right? Or at
Mhm.
least think about it and run some quick back of the napkin math, right?
Yeah.
You're
And-
gonna pay this off. It's
Mhm.
gonna take you 3 years to pay off doing this claim. It's just not gonna
Mhm.
be worth it for you, type of thing.
And
Anything
I'm
else?
more than happy. Like, please call me if you have something going on, because I'm not just going to open a claim for you.
Mm-hmm.
Another thing that I just kind of wish people would know is in that process is you should be reaching out to your agent first, because I've seen it firsthand where if you call, say I'm the homeowner, I have an incident at my house, and then I call the insurance company instead of my agent. So if I call the company and I speak to a customer service rep or an adjuster, somebody over there, I've seen times where that person will open a claim even though you didn't necessarily ask them to.
Right.
But when they hear claim,
Mm.
it kind of goes off in their mind like, hey, this person's thinking about filing. And so I've seen a handful of $0 claims where that can affect your insurance score because people called the company first and not their agent. And
Right.
so, if you call me and we talk through it, I'm not going to open a claim for you. And then obviously if it makes sense, we'll move forward with it. And I'm all for people getting their damages fixed and making sure insurance is going to cover them. I just want to make sure it makes sense first.
Talk it through, right? I mean,
Yeah.
you're the expert in the situation, and
Right.
that's again going back to what has benefits to one, work with a smaller company, and
Right.
two, to have that relationship where you have the ability to talk to someone. You
Right.
have their cell phone number to make a plan and like
Exactly,
make
yeah.
a decision based off knowing the playing field versus, a lot of people probably call the claims line just trying to get more information. Next
Yeah,
thing they
and
know, they're in the system.
Exactly.
And that's,
yeah.
then they don't even know, right? And then
Yeah.
they're all of a sudden their next statement, it's gone up $200,
Yeah.
$300. And that's, maybe why insurance companies kind of get a bad name, is that type of thing. But if it was a little bit more personable,
Yeah.
and people knowing what's going on, that'd be super helpful. So,
Right.
yeah.
So yeah.
Cool, man. Well, appreciate you coming on. If you guys are out there and you're working with a behemoth of an insurance company, you can't get a hold of anyone, and that bothers you, or you want to just get a quote. And for me, like I said a million times already, working with someone personally, that's been a game changer for me. So if that's something you're interested in, we're going to link Oliver's information in this podcast for all the 12 subscribers for you out there. We'll get you locked and loaded, and maybe if people come on later, his information will be there. And it's been great for me. Give him a shout. Thank you guys for watching. Thank you, Oliver. Appreciate it. It was fun talking about it.
Thank you, Marcus.
Awesome.